Hello everyone. Is this a good time to buy gold and silver? Prices have been crashing lately, so buying seems like a risky proposition. And yet, geopolitical risks like sabotage of Russian pipeline or turmoil in UK bond market can be that black swan event that might lead to European economic collapse. As always, there are no easy answers, but we will do our best. We will talk about long-term and short-term prospects for precious metals in this video. We will revisit current CFTC commitments of traders' data to help us with a short-term perspective. We will take another look at historical performance of gold and silver during recessions, current trends for gold in US and in other markets, and few other data points. But first, I think we should discuss latest news about explosion on Russian gas pipeline. This new development might have cast a new light on reasons of ownership of gold or other precious metals. As we all know, there is a good chance that Europe is entering a deep recession due to the disruptions on energy markets. France and Germany just nationalized their respective energy traders, pouring tens of billions in bailouts. UK is on the path to spend hundreds of billions to deal with rising energy prices over the next couple of years, and UK's central bank just announced they will step into the bond market to buy as many bonds as needed to prop crumbling British sovereign capital market structure. All of which is hugely inflationary, so it should be a healthy tailwind for gold and other precious metals. Enter an attack on Russian pipeline. This news didn't get the attention it deserves. That can deal a deadly blow to already strained European economy. I am not even talking about a possibility of retaliation by Russia when the culprit is found. If it turns out to be US or someone under Washington's command, like Poland or Ukraine as latest news point to, we might end up with a military conflict that can lead to a complete collapse of all sovereign bond markets. Gold will go to the moon and might become the only money out there, but I really hope this scenario will not materialize. There will be no winners. I used to think that US would not do anything this reckless, but since seizure of Russian assets, I would not rule out US blowing out Russian energy infrastructure, or at least consenting to it. Again, this is a very far-fetched scenario, but someone blew up that pipeline, so they are forces that are willing to gamble with the fate of the world. We will know more soon, so let hope it will be contained. For many in gold community, 2022 could have been a very frustrating year. After some healthy gains since 2018, there were expectations of a huge rally. At the beginning of this year, we have seen some analysts' price prediction calling for $2,500 gold and $30 silver by the end of 2022. And, to be fair, we were well on the way to hit those targets, if not for a strong US dollar. Matter of fact, I think Goldman Sachs' prediction of $2,500 gold by the end of the year is still a possibility, if dollar reverses its course. It might take more time, but ultimately, we are heading way higher. I will show why I think so. Let's talk about long-term price predictions and then we can explore some short-term horizons. It might help us to decide if it's a good time to buy or a good time to wait. In order to make a long-term prediction, let's start with a simple approach. We can use inflation goals stated by Federal Reserve and reference US bond market pricing. For the longest time, Federal Reserve was targeting 2% annual inflation. We can use that as a simple guide for the price of gold. Under the normal circumstances, our gold would appreciate on average 2% along with anything else. Gold is a commodity, and it is reasonable to expect it to follow the general economic trend. Obviously, it is an oversimplification, not taking into consideration supply and demand and other factors, but as simple guide it is acceptable. As any other commodity, there is a risk of buying gold at some local top along the long-term trend line. But if you are buying on a schedule, you most likely will capture some bottoms as well, and that will account for volatility. Your average should gain you a return close to inflation, all else being equal. This is a simplified base case scenario. As we have seen, inflation is closer to 10% these days, and even long-term projections by Fed are pointing to a multi-year 4 or 5% inflation. So over the long term, we can expect a year-over-year increase in gold at 4 to 5% annually, or maybe even higher, based on real inflation situation. If you look at US bond pricing, you will see these inflation expectations confirmed in bond yields. The situation is fluid, but 2-year Treasury bonds fluctuate around 4% level, right in line with the latest Fed rhetoric. I will make a comment about a popular notion that bond market dealers are the smartest traders in financial world. So far, all I see is a blind adherence to the latest Federal Reserve announcements and almost nothing else. I am sure there is a reason for that adhesion. If you are managing a $1 trillion bond portfolio, would you want to take a risk to make your own predictions or be a contrarian? Most likely, it's a lot safer to refer to Fed's guidance, and that is what they all do. I have no doubts biggest bond funds have a lot more information than we do, but at the end of the day, any big manager would want to cover their own behinds. It's too risky to be a hero. So if the so-called smartest managers are basically follow Fed, we can also use Fed as a guide. This is why, over the long term, we will see the steady increase in price of gold at 4 to 5% annually, provided we are following scheduled purchases routine. As I emphasized, this was a base case scenario. A scenario where economic development is happening in benign environment without any shocks. But the sad reality is that most likely we will see some serious shocks to the system in the near future. It is enough to take a look outside of the dollar zone to see how dangerous the situation is. Basically everywhere. Let's take a look at Japan. I love this example, since it is a model we can use to see where US is heading. Almost 3 decades ago, Japan embarked on QE experiment. Decade later, all of the Western world followed. So what do we see in Japan today? Yield curve control and the falling currency. Yield control basically means that national central bank prints money to buy as many government bonds as necessary to keep a bond yield at a certain level, which destroys national currency in turn. Granted, Japan have been very fiscally responsible, and if not for the sharp increase in energy prices, it could have kicked the can down the road a bit longer. Japan still has over 1.2 trillion in US bonds and they can use that stash to prop economy and yen for a while. By the way, they are selling US bonds to support falling yen now. Most likely, they are doing that at a huge loss, since long-term US bonds collapsed this year, but it's besides a point. The point is that Japanese economy is in a very precarious place, and if the energy prices stay high and for long, you might see a huge drop in yen and that might push gold way higher. So far this year, gold, as measured in Japanese yen, is up more than 20%. Can this happen in US? Yes. Not only it can, it will happen. Dollar can go even higher. But once it returns to its mean, gold will skyrocket. That's why I think 2,500 gold is a very real possibility. Now, what if the latest intervention by Japanese central bank fails and they have to drastically devalue their currency? Gold, as measured in yen, might go up 10x. Likelihood of that is probably small, given the size of Japanese reserves, but 20% increase in price is a very nice appreciation already. They might decide to abandon the yield control, and that will put a lot of pressure on price of gold in Japan. I am not sure what will happen to overleveraged economy of Japan in this case, but it is a possibility. How about Europe? Given the news, European Union is in a real danger of disintegration. They were able to paper over previous financial crises in southern Europe. But now, even the strongest EU members, like Germany and France, are under a lot of stress. Without UK to bail out the rest of the weaker states, Eurozone might be the next black swan. Gold is doing quite well in Euro, but again, if we have an implosion of Euro, gold will shoot to the moon. What are the chances of that happening? I would say it is very possible, but no one knows for sure. How about UK? Latest news from London are nothing less than panic. New government is on a path to spend hundreds of billions, while slashing tax revenues. Even IMF sent a warning shot at new finance minister of UK, but we will see. Gold, again, is doing very good in local currency. But if we have a currency crisis, prices on gold would become meaningless. I do not foresee a new Zimbabwe or Venezuela on the British Islands, but this winter might see a good appreciation of gold in UK. As we can see, gold is a great investment all around the globe, except in US. If you believe that US dollar can go up indefinitely, then buying gold is a bad idea. But if we look at a situation objectively, all of the gains in US dollar are due to financial reasons and not due to healthy economic fundamentals. Eventually, reality will catch up. At some point, we will see a substantial reverse in dollar, which will be good for gold in US dollar terms. If the economic situation in US remains stable, we should expect a steady rise in the price of gold over time. If US experiences even a fraction of what is going on anywhere else in the world, you might see a price of gold to go vertically. I am not a financial advisor, I am just stating my own opinion and you have to use your own judgment. Now to the short-term prospects. Best way that I know of, is to take a look at COMEX futures. But first, we will take a quick look at the history of recent recessions. In the last 20 years, we have seen a recurring pattern. I have a separate video on that and you can follow the link here. But basically, during the last 3 recessions, gold initially goes through a relatively short crash phase which coincides with a general market weakness. At which point Federal Reserve steps into print and it lifts all assets. Nothing mysterious here. It is hard to predict where this crash would end and where the floor would be. Best way is to average purchases on the way down. I bought gold at $2,000 an ounce and silver at $26, and I bought both substantially lower. I just buy ounces and don't dwell on prices. Last week I picked up some silver and gold coins and will buy more regardless of price. I actually added a part-time job to raise extra cash to pay for new metal. It looks like we are heading lower, so extra cash will be handy. Back to futures markets. If we look at the latest commitment of traders, it appears that short-term, big traders are betting on a lower price of gold and silver, but it can turn on a dime. Gold shows some hope for an uptick based in bullion banks positions, with bullion banks being net positive as of the latest report, as it's shown on non-commercial segment of the report. But overall, the sentiment is bearish. In the beginning of the year, I heard major gold producers were making their annual projections based on a $1,600 range for gold, and that would probably put a local floor under the market. If their projections are based on this level, most likely we will see some hedging and that will help market to stabilize. No one is going to produce gold if it's below the costs of extracting and refining. Not a guarantee, but some circumstantial evidence for a possible support level and a near-term bottom. Another reason I think we are near the bottom is prediction by UBS at the beginning of 2022. They were calling for 1,600 range by the end of the year, and so far, they were proven to be right. I am not a professional advisor, I am just sharing what I do. Let me know, what do you think the prices are going to do in the near future? Will gold drop below 1,600 level, or do you think we have reached a bottom? If you like this video, please subscribe, share and like. This helps this channel a lot. Thank you for watching. Until next time.